Our top story today, from major irregularities in KYC processes to submission of false compliance reports, lack of transparency, there have been a series of regulatory lapses, we understand, by Paytm Payment Bank over the course of the last 5 years, which ended up in RBI's stringent action against the bank recently. And one of the big concerns has been around the major KYC violations. The absence of KYC for lakhs of customers, PAN validation failures, instances of single PAN cards being linked to more than thousands of customers, total value of transactions often running into crores, breaching regulatory limits, and so on. There were also worries, we understand, about an unusually high number of dormant accounts, with as many as 30 out of 35 crore wallets Paytm maintained, 31 crore being inoperative. There were also concerns relating to money laundering arising from deficiencies in the KYC processes and lack of transaction monitoring. To be clear, these Paytm customer accounts are under scrutiny because of weak KYC, but there are no allegations or regulatory concerns so far relating to the company or its founder having indulged in any money laundering. The other big concern, we understand, was the fact that the bank did not maintain an arm's length distance in dealing with promoter group entities. Its financial, non-financial businesses were often mingled, and compliances were often found to be false. So all of this led to the action that we saw from the RBI, and the way out could be tough. Joining me now to discuss the fallout of this crisis and how this saga may unfold are two experts: Sandeep Parekh, founder at FinServe Law Advisors, and Nikhil Pahwa, the founder of Medianama. Sandeep and Nikhil, thank you so much for your time here on CNBC TV 18. Sandeep, let me quickly start with you, because you heard the kind of repeated regulatory lapses which caused this RBI action on Paytm. In this scenario, firstly, who do shareholders hold accountable? Because this has gone on for 5 years now.
Right. So I think obviously it's a combination of the main party to be held accountable would be the management. But there is an oversight function of the board as well. So I mean, there would be some kind of liability and scrutiny which RBI would apply to the board as well. Of course, we don't know any of these, the details of this officially. What we have is that one-page order which doesn't get into the details, unlike SEBI orders. So we I think a lot of it is shadow boxing in terms of sources and stuff. But based on assuming those sources are accurate, I would just say that this is it seems to be pretty serious for them to really shut down an entire business.
Well, yes, and that's true. RBI's order not as detailed as SEBI rightly said. But Nikhil, let me quickly bring you in. Your paper interestingly recently said that RBI's action, though not unexpected, seems to be problematic because of the severity of the action. Let me ask you then, in instances like this, where there's repeated compliance failure, if customers are exposed to data breaches, misuse of accounts, related party transactions are not being reported, and so on, what other action should RBI have taken?
Look, at the point that I wrote the paper, all of these current allegations, which are also, by the way, not official, I wasn't aware of those. But even then, I think that they could have taken stringent action instead of, let's say, preventing deposits into the account, but asking, let's say, 197 and payment services to shift their nodal accounts to other banks and essentially operationally shutting down the entire bank, with apparently, at least from the order, no way back is a problem. I'm not saying that the RBI shouldn't have acted. I'm not saying that they shouldn't have acted strongly. There have been repeat complaints and repeat orders regarding Paytm. But just also remember that there are millions of merchants and customers that are using Paytm, especially from a merchant perspective. They probably have the largest merchant base in the country. To essentially completely disenfranchise them in one sweep, I think is a bit of a problem. And when there are third-party liabilities, you need to take those into account. So I would say that they could have said that, if, let's say, certain actions are followed within a certain period of time, they will consider ways of easing those up. And, that's the right mature signal to send for a regulator, not just, just like a chop their heads off kind of a situation, which is what it looks like right now.
Sandeep, how would you respond to that? There certainly must have been, grave enough non-compliance issues, etc., for RBI to have acted the way that it did. I mean, would it be fair to say that the regulator has overreacted? What do you make of this?
So I think for me to answer that question, I need to know the facts, and unfortunately, the facts have only come from sources. So beyond kind of saying that if they've acted harshly, there's probably a pretty strong case. Like Pava said, I think they've acted very, very strongly. It's almost unprecedented to just overnight shut down the asset side of the bank. So I think it's fair to say that RBI has been acting very fairly over its entire history, really. So if they've been this harsh, then there's probably going to be some data and some solid concerns for them to take. Basically, probably the most drastic step of shutting down. And of course, it's not a beheading of us, but just maybe they'll give them time to re-engineer their systems, bring in some reg tech, may make things better before they're allowed to restart.
Sandeep, interesting you say that maybe, RBI will let them function again. But, from many people we've been speaking to, it doesn't look like there's a way out, at least as far as the banking part of the business is concerned. Because, the notification of RBI, if you read it, it seems to have some sort of a finality. There's nothing said in it, unlike past instances, that if deficiencies are rectified, RBI would lift the embargo. Is that not how you read it?
No, so that's not how I read it, really. So I think... for a period of, let's say, 3 months, 6 months, if they're able to clean up the systems, do it through third-party audits, etc., I think there is a future for them. I don't think this is the end for them. But I think they'll have to have pretty drastic action. They'll have to bring in a lot of external audits, whether it's legal, technical, or financial, etc., and then just maybe prove to RBI again that. They deserve to run the business.
Well, we'll have to see what the regulator does. There's no point second guessing it. But Nikhil, what next for Paytm, for Vijay Shekhar Sharma? Because even if you keep aside the banking activity, payments also get affected because many merchants have their bank accounts at the back end linked to them. They don't really have the payment aggregator license to onboard anymore. And just UPI transaction doesn't really make any money. So what next, you think?
So before I get to that, I just want to say that RBI hasn't necessarily been fair in the past, right? Look at, let's say, them declining to give InstaMojo, which also has a large number of merchants dependent on them, small merchants, online merchants dependent on them, a license because of net worth considerations. Look at the data localization that was forced upon WhatsApp without any public consultation, without any warning, without sufficient timeline, where their rollout was halted or completely constrained for a year and a half. So to say that the RBI has been fair to the payments ecosystem in the past is incorrect. And there's several other instances about the botched rollout of tokenization. Consumers still face difficulties making international payments, and recurring payments keep failing. So the RBI, in my opinion, is really not sufficiently qualified to run the payments ecosystem as a central bank. It's better running the monetary policy, fiscal policy, and the economy. I think it should go with the Wadhwa Committee recommendation from 2016 and set up a separate payments regulatory board and let them regulate the payments ecosystem, let them build the capacity. This is not something that the central bank should be spending time on, to be honest. With regards to Vijay Shekhar Sharma and what happens to... Sure, go on.
Yeah, sure. Unfortunately, Nikhil, we've run out of time. But, thank you very much. That's a strong statement you're making that, perhaps RBI is not equipped to deal with payment companies. There should be a separate regulator. We'll leave that conversation for another time. But thanks very much. That's as far as Paytm is concerned. But there's more we have to talk about. Arundhati, is back to you in the Mumbai studio.
Absolutely, Ritu.